So I would say at least 6 or 7 out of 10 times, market is going to be in some form of trading range. The strong uptrends or strong downtrends, these are rare phenomenons because trading would be easy like that. People all want that. But most of these days are going to be very slow, choppy, methodical trading ranges. They're hard to trade and it's hard to find the good setups. So in this video, I'm going to show you guys how to make trading as simple as possible and how to find the highest probability setups during these type of days. So first thing I want to mention is that the price action is universal. Our rules work on all markets, on all time frames. So if you learn to read the price action, you will use these skills and you will translate it into multiple different markets. And by the way, if you're new to this channel, my name is Thomas Wade and I'm a price action day trader. So that means I solely rely on the candles. I don't need no fancy indicators. So I'm using for explanation to this video, this is a S&P 500 2000 tick chart. There is, however, one indicator that I'm going to be using. This is 21 bar EMA. 21 bar EMA is this blue line that is going up and down, up and down. This is just a supportive indicator that I use to help me identify, what the current market structure is looking like. And sometimes the EMA may serve as a key entry point because key entry points are the points where highest probability setups occur. And those are support and resistance lines and trend lines and plus EMA. But also I can use the EMA during the slow trading range like this, just to see what are the uptrends, what are the downtrends. And you guys can see that the EMA is really flat most of the times. This was just a short little uptrend. But then EMA went flat once again. So there's no clear uptrend and no clear downtrend. And by the way, if you're asking yourself, how do you exactly recognize the trading range? What if there's some sort of uptrend? Basically, this is the no-brainer question. If you're in a trend, uptrend or downtrend, you already know. You don't have to ask yourself. It's the situation where you're not sure what's going to happen. You really cannot find the best setups. That is some form of trading range. Trading range doesn't have to have perfect support and resistance, double tops, double bottoms, but there is some variation of it. So the second thing I have to do if I want to trade this trading range successfully, I need to identify the support and resistance lines because trading range is always, binded by these lines. So I have to find the key levels, that was we call it. And I came around, when I came around to the chart somewhere around this point. So all I would see would be this price action that is right here. So I can tell just by eyeballing there's some double top form happening. So I'm gonna put my resistance line at the top like this. At the same time, I can see there is some form of support happening right here. This is a key level and prices are reacting nicely to it. So these are my, this is the first thing, my pre-market analysis that I have to do if I want to, find the best setups as possible. And what are the best setups as possible, as I keep mentioning over and over again? Well, basically, these are two-legged moves. Price action trader, probably very famous. You all know him, Al Brooks. He figured out that the market moves in twos and there are two-legged pullbacks, two-legged entries all over the chart. It's just tied down to our human psychology. You don't have to, go deep why it works. You just have to understand that their market moves in twos, make two-legged pullbacks, and the second entries are high probability setups if you find them on the right places. And also, when we are looking for trend entries, we are looking for failed second entries. So, but we cannot just find these entries. We cannot just take these entries all over the chart because, some of these entries will fail on their own. You probably can have like 65% win percentage if you just trade those second entries or the traps alone. But, my goal is to have as less losers as possible, but everybody has losers. I'm no trading guru. I'm just a guy. I'm just a trader, but, who has losses as well. But my goal is to have as less losses as possible. So what I'm going to use during this trading range, I'm going to use the shortened trend lines because there's a rule in price action regarding trend lines that after trend line breaks, the traders are going to look most likely for the retest of a new extreme. And after the new extreme is being retested, there may possibly be correction or straight up reversal. And this information is, crucial to me while I'm, trying to identify what's going on in the markets. So the first trend line I would draw would be trend line something like this. I'm going to make it slightly lighter opacity. So this will be the downtrend working lower, and you guys can see we have a break and a new low. Prices went into small little consolidation, small little congestion. This is still, you know, pre-market open, so no wonder market is, you know, slow volatility like this. And we have a second leg to a new low. We have working lower, first leg to a new low, pullback, second leg to a new low. So from this point on, I was expecting, you know, move up because this downtrend played out. So I was expecting a move up. So your first instinct, what can you do is you can draw the very shortened trend line, something like this. And you have a break and a new high. You have another break and another new high. And you guys can see that, you know, this is probably very, very shortened trend line. You know, this is probably not valid because you guys can see there's some pattern forming and you keep making higher highs, higher highs. So there's probably some bigger trend line. So what I did, I adjusted the trend line like this. And you guys can see how nicely it fits off the top. This is the tip for you guys. You don't have to find it always off the bottoms. Sometimes, and if you learn to spot it off the top, you will get an, you know, edge because you will have your trend line much quicker in place. If you find it off the top right here and you put it to the bottom like here, you can actually take this trade very early and you're, you know, much ahead of a lot of, you know, price action traders who are relying to wait to market prove them what is going to happen. And you have a break and a new high, or attempt to make a new high. And here would be our first high probability setup because this is the new high that prices made. And we're working up lower. We have a first entry long because prices trigger one tick higher above this bar and the first entry long failed. But that's okay because we don't want to take first entry long. Even though it's off the trend line, this is very small trend line, but the high probability setups, as I mentioned earlier in the video, is a second entry long. In this particular instance, you know, the long are the second entries. So a first entry long that failed, pullback, second entry long. So this is a two-legged pullback, but also there's another, you know, key information that we are looking for. We have a first break of this channel working up higher, and we are in a trading range. And in trading range, you go from lows to the highs and vice versa. So we're looking for a new high of this uptrend, and we're also looking for prices to reach the resistance. You know, it was good enough for scalp because this is what we do here. We're mainly scalpers. You know, quick, easy trade, and market, you know, gave up and made a one push lower. You know, so attempt to make a new high is close enough. Sometimes in price action, you're going to have a perfect new low just like here. And sometimes there's just going to be attempt to make a new high. Nothing is ever, you know, 100% in price action. If it was like that, trading would be easy and we all would be super crazy rich. So as the market is reversing, or what I can do as well is to draw the trend line, just take into consideration this move and draw the trend line something like this. And now we have a trend line working lower, we have a break and a new low. At this point on, we are bouncing off the resistance. And you guys can see we bounce off the resistance here, off the support, excuse me, which would be a potential long setup. But, you know, as you know, we have a break and a new low here. So from this point on, market played out. This downtrend is over. And this is a failed break below this support. Now, you know, I know that most people on YouTube teach to buy or sell the breakouts. But most breakouts of trading ranges will fail at least temporary. You're almost always going to get some sort of pullback back into the support or resistance line, retest it, and then continue working up higher. Eventually the breakouts will go and break in that direction, yes, but most of these breakouts will fail. So this trade right here, this is a failed break below this support right here. It is a failed break below this double bottom right here, and this is the way we want to capitalize on it, because a lot of traders, a lot of institutions know that all the people who are going long above this support, they're keeping their, you know, they're keeping their sell stops probably a few ticks below these bars. So what they're willing to push the market lower just a little bit, trap all of these traders out, use their liquidity, and then rally the market higher in their position, because they don't want to keep just buying the market, because they will be making their prices incrementally, you know, lower and lower. They would be, you know, losing money, so to say. So they want to use the liquidity of everybody who went long right here, because the people use their stops few ticks below these important lows. And I'm going to do the same thing as the market is working up higher. I'm going to draw the shortened trend line to, you know, help me identify what kind of trend it is, so I can look for a break and I can look for high probability setups. So here in this instance, we have an uptrend working up higher. We push through the EMA nicely, and this is what I like to see. I want to see the no rejection from the EMA. There are very few traders trying to go short at the EMA. We slice through the EMA. We have a strong leg up. We have a first entry long, pullback, second entry long. This is a high probability setup. Second entry long. This is the first break of this trend line, and we wait for a new high, just like we waited here. But we are already, by the time this bar finishes, we're already very close to the resistance, very close to the high of the previous move, and this bar is way too big. And we are quite far away from EMA, just a little bit. I would like for prices to touch EMA a little bit better. So this is a two-legged pullback, still would have worked. This is why the high probability setups, you know, they work so often. But, you know, we want to, you know, minimize, you know, our losses as possible, and you know, you never know whether this is going to tick a few ticks ups and then instantly reverse lower. So we keep working up higher right here. We have first leg to a new high, pull back, attempt to make a second leg. I take a look, we broke clearly this resistance, and you know, just like always, what's most likely going to happen, you're going to have a failed breakout. At least price is going to try to go and retest the support that may act as retest the resistance, excuse me, that may act as a support. Now, since this is a failed break higher, there could be a case made for traders taking the shorts right here, the shorts right here, the shorts right here. All of these shorts would have worked because you would be keeping your stops above the signal bar. So all of these trades would have worked, but that's not the point here. For my liking, these trades are still a little bit too aggressive. Even though this is a failed breakout and you're very far away from EMA like here, and EMA acts as a magnet, it will pull prices together. This is also another reason why I like plotting the EMA, because the further you are away from EMA, there's a bigger likelihood you're going to snap back and pull back. So this was, you know, failed break higher above this resistance, possibility, another good trade. But what I like to do, we have this, you know, small little triple tops here, some sort of variation. When I'm looking for counter trend entries, you know, I'm looking for second entries to fail. When I'm going long in trend, I'm looking for second entries long. But right now, this uptrend played out, and I'm looking for shorts because I'm relying on the breakout failing, and I'm relying on very long people who bought the market, you know, going to be late to the party. So I'm looking for failures of second entries. So I started a count over this from this bar because all these highs are matching. We have a first attempt to go higher that failed, and a second attempt to go higher. And this is a nice rejection bearish bar. Now, this is a two-legged pullback long, but why am I not taking this two-legged pullback long? But it is a second entry long, so why am I not taking this? Well, it's because the uptrend already played out, and this is a trading range. You know, if this was a very strong uptrend, I could potentially be looking to take, you know, additional second entries, even if the trend played out. But this is a clear trading range, and you're just late to the party going long right here. So this is a first entry long, pullback, second entry long that failed. It is a failed break higher, and, you know, failed second entry long. And since we are working lower, I can either draw the short-term trend line like this, but this feels like it's a little bit too far away from this downtrend. So what I would do, I would draw the downtrend like this and just copy it and put it to the other side. You can use the tool. I just like it to do it the old-fashioned way. So this is a two failed attempts working up higher, and quick, easy scalp, high probability setups, all just using the short-term simple price action. I'm just using the short-term trend lines and relying on trending range rules working. But as you guys can see, we pushed higher, and there was unexpected, you know, buying power. A lot of people starting to buying, you know, out of the nowhere. But, you know, there's no way to know, you know, to buy this market or to sell this market. You just took your high probability setup right here, and you watch the prices go, and you just made one big leg up. It's still, you know, we're above the resistance, so no surprise, prices pull back lower. But here, you know, you can see that the price action started to change a little bit because we were supposed to go lower. If this is a proper trading range, you're supposed to go up, down, up, down. We were supposed to go down here. So the way we pushed higher above this is the new high right here. You have a first entry long, pullback, second entry long attempt, and this is the new low. You have first entry short, pullback, second entry short, attempt. Now, you can see how this bullish bar is now relying on, you know, the support that previously acted as a resistance. You know, the difference between this bar and the bar right here, this, you know, this was just a trap to trap people who went long way too late because the current uptrend played out. But now we start to get more price action, so we have to adapt because clearly we're not working out lower. And what you can see, there's some potential trend line, bigger trend line that can be working like this. And when you're trading live, this is all you would see. This is all you would see. So this would look very legit. You have a new low right here, first entry short, second entry short, first entry long, second entry long. Bullish bar, we're coming off the trend line and we're coming off the support that previously acted as a resistance. So you adapt your gears, you switch the gears just a little bit because you don't want to keep forcing selling the market when it's giving you clear signs that it's not, you know, going to the other side, because we were supposed to rally lower just off of this downtrend and it didn't happen. And you guys can see we have a break, attempt to make a new low, but there's a trend line in play, so this is close enough. This is just attempt for me to make a new low, and I'm fine with this. And a failed second entry short, nice bullish bar, quick first scalp, and prices are starting to make a huge tops here. You know, this is where the price action is starting to be a little bit unclear. So are we going higher or are we going lower? Because once again, you have a double top right here and you snap back instantly lower. You have a first entry long, second entry long, failure, pullback off the EMA and off the resistance now. But when you're trading this live, this is all you see. So you're still expecting uptrend. But once you keep working lower, you push below EMA and the EMA holds prices. This is where you have to once again adapt. This is why trading takes, you know, quite some time to learn, because you have to learn how to adapt and how to learn to read the price action. Because as we are working lower right here, we are so below EMA now. This move was gigantic below EMA. This move was slow, choppy. There was a lot of bullish bars. There was a multiple bearish consecutive bars. So this is a clear sign that the trend is changing. You push below EMA, beautiful bearish reversal bar, and the EMA holds prices nicely. This is a sign that there's a lot of sellers in the market, you know, selling at the EMA. So this is a good indication. But this is just a first entry. Even though we have a break of this channel, we're waiting for a new low according to trendline rules. This is just the first entry. What I like to wait is for this lower high, another confirmation of the EMA gigantic bearish bar, and it is a form of, you know, 2 attempts to go lower. So this is another high probability setup. We are still below the EMA and we are still waiting for a new low of this downtrend because we broke the trend line. So most likely we're going to retest the new extreme. And we're close, very close to retesting this support, and the price action is starting to reverse.